Hello from the Dukascopy TV studio in Geneva. We are talking about changes in regulation and their impact on the Swiss financial institutions and the Swiss economy with Mr. Ludo Schockert. He is Director of International Tax Consult in Nyon, Switzerland. Welcome, Mr. Schockert, to the studio.
Thank you.
So, consolidation takes place in the banking sector right now. Can you outline the main drivers and factors for this consolidation?
I think one can say that there are two major factors playing. One is within the OECD and even in other areas as well. There has been a drive towards automatic exchange of information on client details. So it's not only within OECD, it's also within the European Union, and even on a bilateral basis. It's going on. Switzerland, for example, has been signing quite a range of new double tax treaties, and always as part of those new treaties, automatic exchange of information is part of it. And sometimes it's for the sole purpose of exchanging information that Switzerland signs these treaties. That is, let's say, within the framework of Switzerland trying to get very good notes within the OECD. I think that's an evolution that the last few years has taken place. So OECD, EU bilateral treaties make that automatic exchange of information will take place. I think 5 years ago that nobody would have anticipated that this would have happened only 5 years ago. So this obviously has quite a big impact on the Swiss financial sector, because the Swiss financial sector is predominantly active in private banking. You do have the retail banks and the big banks, but quite a large chunk of the market is private banking. So that's one thing that is important. Secondly, there's the fact that more and more regulations come into play. This can relate to tax. For banks, we see that banks refuse to open bank accounts for American citizens because the burden in terms of compliance is so high that they just do not have the systems in place to treat those clients. So that's just one example, but there's numerous examples which are similar, where banks, because of regulation, are in fact limited in their business, and the impact can be quite significant, especially on the smaller institutions.
And let's quickly highlight this automatic exchange of information within the OECD framework. Do you see Swiss banks well prepared? And what advice would you give to financial institutions in Switzerland?
I would say that they are in general not so well prepared, and I would use the term ostrich policy for so sticking the head in the sand, which has been happening over those last few years. I think that the financial sector in general in Switzerland is not so well prepared, and I compare it to some other countries which have anticipated this change, and specifically one can talk about Luxembourg and Dublin, which are financial centers. As an example, one can quote the fact that on a worldwide basis, the funds that are domiciled in Luxembourg now account for 9% of the worldwide funds. Dublin is 5%. Switzerland is only 1%, and this is despite the fact that the assets being managed within Switzerland are much higher in terms of the volumes than in those two other financial sectors. So I think that it's fair to say that one hasn't really anticipated very well the changes that were going to take place. So if you ask, what advice would you give to the banks, I would say that one is the impact of automatic exchange of information is going to be that in the more traditional markets where the customers had an interest in bank secrecy, that the impact will be bigger. So in those markets, I think in general banks, but also advisors and the investors themselves should focus on structures that can withstand the exchange of information. It's something that we as a company, we International Tax Consult, since our foundation in 2002 have always opted for. One can park his money in some remote island, but that's not a lasting solution. And so the one advice would be focus on structures that are solid. The second thing, I think it's going to be necessary for Swiss banks within especially the private banking to diversify in terms of products. I think that's a necessity. The banks have had what one would call in English a very cushy life because the clients they didn't have to do a lot of work to acquire the clients. They didn't have to spend a lot of time to find solutions for the clients. But I think that's something that unfortunately for the banks is changing. So diversifying in products, I think that there is a way to go. What I would advise is also not to go too far in terms of risk taking, because it's a gradual process. A bank that's been active in private banking shouldn't suddenly venture into a very risky business. So I would approach it gradually. I would say that's probably something that would suit the Swiss market very well, because it's a market that's characterized as a stable market, and Swiss people in general have a tendency to plan longer term. The typical American planning is for the next quarter. For a Swiss entity, it's going to be more like in terms of years. So I think that's not to give a too bleak picture of the situation, but it's a possibility.
But if we see, if we look into the future in 5 years, where do you see this consolidation going, or what is your perspective if we look to the future?
I think we're already seeing consolidation. So what is happening is, because of the burden of compliance, the smaller banks, they cannot cope with the burden of compliance in general. I was talking to somebody of the private bank Lombard-Odier yesterday in relation to funds, for example. Just to give you an idea, traditionally when people selected funds, they were looking at the economics of the fund. They were looking at the quantitative aspects of a fund. Now they actually appoint a tax specialist or a tax analyst, they call it, and a legal analyst to decide to which customer they can sell a fund. So the regulation is having an incredible impact. So smaller institutions cannot cope with this kind of situation. They cannot hire for their business those specialists which are needed to give good solutions to the clients. So smaller banks are going to have to consolidate. It's already happening. It's also happening in the area of the independent asset managers in Switzerland, so-called tiers gérants. So these are people who manage funds for their clients but are not linked to a specific bank. And it's a typical Swiss phenomenon, this independent asset manager. So I think during the earlier part of 2015, there's already been 200 liquidations of independent asset managers. The reason is very often the burden of regulation, that people simply say we can't cope with it anymore.
Thank you very much for this walking through of the regulatory changes. We will be back with a second interview on the Swiss corporate taxation. Thank you very much for now.
Okay, thank you.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.